Yes, Sirski. All right, boys. Perfect time to buy? Well, I think it's all dependent on how much of a drawdown you can absorb. So we're going to dive into this whole topic in this video, okay? Okay. First and foremost, let's see where BTC is at right now. BTC currently trading at $95,500. It wicked to as low as $93,000, which, by the way, I did say last week could mark the bottom. This might be the generational bottom, assuming if you believe we are still in a bull market, okay? If you zoom out, we are currently correcting slightly more than 50% of our previous move from the Trump tariff lows. That was at 74K, peaked to 126K. And every time that has happened where the previous move, the previous pivot point, the previous swing low moved from there to create a new high, the next Black Swan event would eventually see a 50% correction of that move, then bounce towards higher. But ladies and gentlemen, I think this is a little bit scary, right? Because we're seeing slightly just more than 50% of correction here. Are we going to continue lower? Or is this just a deep correction before we see BTC grind back up and hit new all-time highs again? Okay, we're going to discuss that. All right, a couple of things to know. From a technical standpoint, this is the bottom. 93K is the bottom. I'm very confident about that. But the thing we're going off, guys, is we have a macro-driven event. Okay? That's all it was. Now, you've got money that is expensive still, and you've got bets changing on the idea that the Federal Reserve might actually not cut the rates. Huh? One of the Fed members, Kashkari, came out saying that he was reluctant to see the rate cuts happening in December. He's calling for the idea that we do not need to cut in December. And that's why you're seeing the market right now taking a tumble. Okay? But this is also very annoying because you have the Federal Reserves keep moving the goalposts. 1 minute, they're focusing on the labor market. Then the next minute, they're focusing on inflation. And as long as that's happening, Bitcoin will continue to struggle. And especially so if the interest rates are going to be higher for longer. Right? It might make a little bit of recovery in the low time frame, but in the trajectory of Bitcoin's price, we're not going to like it if interest rates are higher for longer. More than half of Fed officials are skeptical about December's need for a further reduction in rates. He's saying the anecdotal evidence and the data they got just implied the underlying resilience in economic activity more than they had expected, arguing for a pause to rate cuts. It's a very simple narrative, really, okay? So we're going to be diving into a couple of charts. Let's break it all down. Look at this. Probability for a 25 basis point cut is now, for the first time in 6 weeks, by the way, it's lower than 50%. We're currently at 43.9%, okay? That's the basis of it all. What do you think MicroStrategy is doing? They're borrowing money. They're offering convertible bonds. Companies go out and borrow money, and money is too expensive. Then they're not going to borrow money. They're going to wait for it to actually go down. They're going to go seek money elsewhere. With news like this, right? They go to their boardroom, they go to their meeting room, and they're saying, well, it's still too expensive to buy. It's still too expensive to borrow, so we're going to hold off on that, right? So investor confidence, especially for the past 2 weeks, the past 3 weeks, ever since the last FOMC meeting, is going down because these companies, look, they're not just buying with their own money. They're going to be borrowing money. And if right now it's expensive to borrow money, what's the point? They can just wait it out, right? But for the retail, especially if you're in leverage position, okay, maybe some of you are still YOLO long max leverage, it's not good news. That's why it's very dangerous, okay? But then again, it's not just the US side. You've also got the problem with the Japanese yen, okay, with Japan. This is in the East. They're planning on increasing their interest rates. Look, the forecast for the next Bank of Japan interest rate decision is on December 19th. And the forecast is saying that they're going to raise by 25 basis points. Okay, so investors, I think they're holding back on the concept of the carry, which means they're going to borrow yen, convert it to dollars, then put those dollars to work in the stock market. You've got the possibility of interest rates increasing on the yen. That's going to force investors to sell their dollars that they use before to go and buy yen. Okay, then to convert from the yen, and then you're going to have another pullback in the stock market, which is very shocking for me to see. How NASDAQ performed on Thursday and Friday, right? We've spoken about how price during that time was attacking this lower high, but no, rejected, not even close. S&P 500, you've taken out that lower high, but now we're trading below that lower high on November 6th. Right? Dow Jones, same as well, below the previous lower high on November 6th. What does this mean? Visually, we can see that the markets don't like the idea that rate cuts might not be happening. They're betting for it that they could be holding, and they're pricing that logic in. You can see that in the NASDAQ, and that spills over to crypto. Very, very annoying, right? And I think this is one piece of data that you should be paying attention to, because this is the exact chart I think the Feds are really keeping a close eye on. This is the beverage curve. Okay, just a quick summary of this. You just need to pay attention to two lines. The red line, which is the total non-farm jobs opening. Then you have the blue line. The blue line is the number of unemployed individuals. Right now, over the past year, what you can see is for the first time in a year, okay, the blue line, which is the number of unemployed individuals, is crossing above the red line, which is the total non-farm job openings. When you get this happening, when you see the blue line trading above the red line, that's a little bit of problem, okay? We need the red line above the blue line, because ultimately, if you've got job openings, that means there are companies looking to expand in their businesses. They want more people to take on so they can do their business, right? That's great. Investors like that when they see companies expanding, they're offering jobs. It means there's money there for people to be paid. It means you've got the economy working right now. But this is a curve switch where now it seems that there are more people unemployed than the jobs opening available. So what does this mean? It means when you look at it, you don't really have anything to be worried about just yet, okay? Because it's not like a big spike. But I think the Feds are watching this curve very carefully. Why? Because any spikes in the blue line to the upside, right, where it's like going up like that, would then give us the idea that there are a lot of people unemployed in the US. And that also means, coincidentally, the red line will be trending lower. If there's going to be a spike for the red line to the downside, right, the total non-farm jobs opening, that means there's no openings available. Companies are less reluctant to employ people and scale back. And if anything, cut even more jobs. Then we've got ourselves a bit of a problem, and it's a completely separate issue, because now the issue is this. If these two lines expand in the next 6 months, it tells us we could be going into a recession. There you have it. You've been hearing talks of recession coming out and about in the past year or so, whether that be on CT, whether that be on YouTube. Well, now, ladies and gentlemen, you're looking at data that tells you there's a huge problem in the jobs market in the US. Okay? As of now, it seems like there are more unemployed people than there are jobs opening. Okay? That's a whole different discussion. And by then, it's not just about Bitcoin. It's about everything else. Oh, shit, we're in a recession. It's 1928 all over again. I wasn't born in 1928, but you know what I mean, right? I think it's even more prevalent if you just look at the 6 months. You can see it's starting to expand. But it's not too much, but it's enough to warrant for guys like Kashkari to say, hold on a second, we don't really need to cut rates because it looks like the economy is doing okay. We haven't had an influx of layoffs, but we don't know where we are with the jobs market. I think that's what they're saying, because they still don't have data. They don't have CPI. They're not getting any labor market data. The government just recently reopened, but the Bureau of Labor and Statistics, they're not giving them anything. And trust me, I think they're taking their sweet ass time, because just this morning, I went to the Indonesian consulate to get a visa, And holy shit, there were only 3 people there, but I waited for an hour because there was only one lady there handling visa application. So I don't know what it's like in the US, but maybe you can pop back down there, check in the Bureau of Labor and Statistics to see if there's actually one person working at the desk. It reminds me of that Zootopia scene, the sloth scene. Okay, that for you, ladies and gentlemen, is government workers at its peak, functioning at its finest. Okay, so everyone's just waiting on some sort of data. Right now, we're trading in the dark. We're trading in the dark, and you can see this. Not just don't just look at crypto, but I want you to look at the stock market right now. Bit of wary, right? Bit of wary. You look at Nvidia, and I think this one, if you're going to be looking at stock specifically, especially in the next few days, pay attention to Nvidia because their earnings will come in 2 days. If the earnings even come out break even, I think we might see equities tanking a little bit. But, recently, earnings report from the Magnificent Seven have come out, beating market expectations. Can we see Nvidia repeat again? And if they have really strong earnings, that's going to be a very big counter to Mr. Michael Burry. Okay, remember Michael Burry is still in his puts, his big short against Nvidia and Palantir. If you haven't caught up on the news, just know that pay attention to November 19. Their earnings report will come out. And let's see if it does, in fact, beat market expectation. And I think just beating market expectation alone is not enough. Like, you need like a big news. You need like they make you know what I mean? Like big earnings. They need big earnings for a big counter, big answer to Michael Burry's position. Okay. So now we know where we are in terms of equities from a technical point of view. Because we know that the tech market is prone to interest rates. And if the idea of interest rates are not going to be cut, then it means it's going to be costing these businesses more money to borrow in the future. Okay. Meta has recently been borrowing even more money, so it's going to cost them more. And with that being said, now let's look at other forms of safe havens. Like, where are the investors rotating their money to? I think Euro is also one of them. Okay. We're seeing a bit of a climb up for Euro. We have been declining since September 2025, but now it's moving up to take out this lower high. Potentially, I think, especially the start of this month, we're seeing investors are deeming that Euro could be a potential safe haven as well. Because obviously you've got inflationary pressures in the US dollars. You've got debt mounting up. How much is it, by the way? 37 trillion. What the heck? And you've got the narrative of overvaluations of AI stocks, the stock market. Okay. So I think another option for them is they're rotating over to Euro. Why? Because I think it's cheaper to do business in Europe. Expectation of interest rates is going to be higher for longer in the US. So if I'm an investor, fuck it, go to Europe and transact over there. Going over to yen, we're seeing it consistently climbing up now. Consistently climbing up. I think it's doing what? Trading positive, right? So if the yen is trading positive, what does that tell me? It means they're coming out of dollars. They're moving into Euro, they're moving into yen because they're pricing in the move that for the time being, we're not seeing Feds making any progress with rate cuts. They're looking for opportunity elsewhere. Remember, guys, these are like billion-dollar position. If they're going to lock in for a 1% yield higher elsewhere, they're going to do that. They're not like us, okay? So even a 1% move is enough for them to move their money to another currency to lock in the yield there. Look, like right now, it looks like the prospects are better for Euro and Japan because Japan consensus is already they're going to be raising interest. So meaning yen is going to be a lot more expensive, right? Better buying them now and then lock in a yield there. Look what Warren Buffett's been doing. What has he been doing? He sold everything to cash. Now he's showing interest in the Japanese economy. Is that a coincidence? I don't know. All right. What does that leave us with BTC? Remember, I told you about the open interests in the derivatives market. Essentially, large puts in 111K, 110K. Puts is short, right? In the options market. If prices are going to overextend, which we have been below 100K, they're forced to sell underlying BTC, right? But that cluster is still there. And look, they're adding salt to our wound. BTC, this is off of November 14th, Friday. BTC options point to bear market as traders hedge with more put calls. Options indicated bearish trading. I mean, guys, if the media is already covering this after I've covered it, then what do you make of it? But what's happening right now? Increased activity in put options. Derivative traders expanded their put contracts, suggesting the highest probability for a dip to 85K. BTC options levels point to a bearish sentiment for Q4. I learned from this quant, this Wall Street quant, this guy right here, Lit Nomad, says the best source of information to quote unquote price Bitcoin is look at the options market, because that's where the serious money is. Perpetuals market is more so for hedging, but in the options market shows more commitment because there's an expiration date, there's a maturity date, right? So now the data is telling us it's even more bearish, right? Most of them are expecting a dip towards 85K. Now, boys, that would be hella scary, okay? That would be hella scary because look at the weekly first. That puts price at here, 85K. That's the open of 21st of April. Based on my personal opinion, my analysis tells me, just technical wise, we're not looking at fundamentals. This is the bottom because we have ranged at 93K during late April. Then early May, you have the breakout towards 104, reclaiming previous highs. Consolidate there for a bit before eventually creating a new all-time high at 123K. Okay? I'm going to play along with their thesis too. If we do not hold 95, 93K, because as of now, we're just looking at the daily, we've found some sort of balance in the market where we are agreeing, where buyers and sellers are agreeing that 93K and 95.6K is a fair price to trade BTC. Okay? Now, eventually, we're going to have to move out of this range. The question is, will it be up back towards reclaiming 100K? Or will it be more in line with the bigger players in the options market thinking we can sink down towards 85K? I don't fucking know. Okay? But whatever the case is, okay, is if we do get a dip to 85K, the more important question you should be asking yourself is, what are the other players going to do if price comes towards 85K? Are you going to be buying BTC now? What is the definition here of buying? Are you going to be spot buying? Or are you going to be longing on futures? As retail, what are you going to do? You think this is the macro bottom at 93K? Because if it's not, if it turns out it's not the bottom and we go to 85K, you'd think to yourself, oh shit, I should have bought at 85K. Basically, is the cost of buying Bitcoin now gonna cost you more in the future? Probably. And not from the perspective of buying it. Now it might be cheaper, but the value of money might be more expensive to buy Bitcoin. So that's how investors, that's how the big money managers would be thinking is, should I buy now or should I wait when I can borrow later? Because remember, their goal is 2%. We just don't know how long it will take to get to 2%. So if you're a big money manager where you have more options tool to borrow money, why do you want to borrow now when it's a bit more expensive? Why don't you just want to wait for rates to cut? Then you can borrow a lot cheaper, right? So don't just, if you're going to be like, okay, my takeaway is this. If you're going to be thinking from the perspective of whales, institutions, rich people, don't think like how you're thinking now. You want to think in terms of borrowing, because at the end of the day, that's the foundation of capitalism, right? The ability to borrow and then do whatever you want with that money you borrowed, right? So the big money will always be asking this: should I buy now or should I wait when I can borrow later? That's the answer to the question you've got to look at, okay? Because if you're looking to borrow money for sure, when you know economic conditions will be favorable for risk on assets, naturally you just wait, right? That's why I really agree with that. The market can stay irrational longer than you remain solvent. And I think this is even more prevalent for us, you and me, retail boys, day-to-day boys with 5-figure, 6-figure portfolio. Because these guys with the 9-figure, 10-figure portfolio, they have more toys to play with. And that's borrowing money. All right. So don't overthink it. It's very straightforward. It's when it comes to crypto, it's really the narrative of rate cut. You also have that discussion of recession, but that's going to come down later down the line, because I think it will take time for these lines to diverge if that's actually going to be a case. So yeah. All right, boys, you know what to do. Smash up the like button. Follow me if you haven't already. Love you guys. Take good care of yourselves and trade responsibly. My name is Ron. Shana now.